Hello, and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research, and Alan Bush, our Senior Financial Futures Economist. And now, my first question is for Steve. Steve, what is the trade expecting for the June 30th acreage and stocks report to say?
I think the market is looking for a slightly bearish report with corn acres up at least 2 million, bean acres up 1 million from the USDA's March intentions. All three corn, soybean, and wheat stocks should be below a year ago. So the extent of whether or not we're below the average guess or above the average guess will dictate whether or not we're going to put a bottom and foundation in market for some summer weather trading, or if we trade lower.
And on that note, what is the latest U.S. Midwest weather forecast?
Well, over the weekend, there was a lot of rain that fell across the central Midwest from Missouri through Illinois up to northern Indiana and into Michigan. The 10-day forecast is more rain in that area, but it was dry across the North Dakota, South Dakota, Canada prairies, and the Pacific Northwest. So for the next week, we expect that same type of pattern. Our weather guy feels that as we go into July, the dry areas of Dakotas and the Canadian prairies and the Pacific Northwest will continue to stay warm and dry. There's so much moisture in the ground in central Midwest that we may not work a ridge into the Midwest at this time. But he does think in August that we will expand the ridge into western Minnesota, western Iowa, and Nebraska, which could impact the soybean crop. So I think right now the weather is a little friendly to the marketplace, especially with 10% of our corn, 15% of our soybean acres planted in the Dakotas.
All right. And there's been a large drop in grain and oilseed open interest. Why? And how has this impacted prices?
I've always thought that open interest is kind of a barometer of bullishness. And so late in 2020, we started seeing open interest go up, and it peaked at almost 1 million contracts in soybeans. On Friday, the open interest dropped to 295,000 contracts. In corn, at the same time, we were almost 2 million contracts in corn, and on Friday, we're down to 1.2 million contracts. So I think that the slow export trade, the improved weather conditions, some of the uncertainty in politics has all driven the prices down and open interest drop. And I think it's going to be a good indicator of whether or not we see a rally in the marketplace. If open interest starts going up, we could be starting a rally into the summer.
Thanks, Steve. I'm moving over to Alan. Alan, has the rate of inflation peaked?
I do believe that it has peaked. Now, keep in mind that there's still plenty of inflation ongoing, but the actual rate of inflation, I think, has peaked. And as you can see, many of the industrial commodities are well off of their highs. Although crude oil has held up very well, lumber has declined dramatically from $15.91 in May down to $7.74 lately. Copper is down almost 60 cents from its May highs. Platinum is way down. So I think the Fed was originally right in their thinking that inflation would be transitory. Of course, then they became a bit more hawkish at the most recent Fed meeting. But so I do think the rate of inflation has already peaked in the overall markets.
Okay. And why has the 30-year Treasury bond futures been so strong since the middle of May?
Well, for the same reason. If inflation has peaked, now keep in mind it's the rate of inflation that I'm talking about, that would positively affect futures at the long end of the curve, since the long end is more susceptible to inflation expectation changes. So the bonds have held up very well. And I think the bonds are underscoring the theory or my belief that inflation will not be as strong going forward as it has been in the past few months.
Okay. There is a triple top on the daily chart of the September Russell 2000 futures at the 2347 area. Will this resistance be taken out?
Yes, I think it will. And keep in mind, there's an old axiom that double tops seldom hold and triple tops almost never hold. And I think this will be the case again this time, that triple top will be taken out to the upside soon. So we are likely to see higher prices, not just for the Russell 2000 taking out that triple top, but I think all of the stock index futures, at least in the short term, are likely to continue higher.
All right, thank you both. Remember, the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, please visit www.admis.com. Thank you.